Two random dudes invest. Hey, I'm Danylo.
And I'm Brent.
And this is Two Random Dudes.
Invest! If you're just starting to invest or thinking about investing, this is the show for you.
We'll help you build the tools, strategies, and mindset to become a better investor.
And now to the dudes.
Dude.
Dude?
Dude.
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 Yeah. All right.
All right. We're down at the fifth drink.
Cheers, buddy.
Yeah, cheers.
I'm loving this Porto, man.
Yeah, it's pretty good. It's darn good.
Welcome to Two Random Dudes.
Invest. So, I'm Danylo.
And I'm Brent.
So, what are we talking about here today?
Well, we're talking about the fact that we are both photographers and we are starting to invest. And today we're asking the question, should you invest if you have debt?
It's a loaded question there, Brent.
That is. What do you think, my friend?
So before we continue, we should say that you've been investing for almost a decade, but more seriously now. But you got some money in there. You had some money.
I had some money in there 10 years ago. I got in, I got out.
Yeah,
I really started to focus on my career instead. And in the last year, I've gotten back in quite heavily. And you have just started 6 months ago, I believe.
Yeah. So 6 months ago, that's when I got all in, baby.
All in.
Yeah, I got obsessed about investing and anything to do with investing.
Right? So this show is basically for people who are, just starting out or wanting to start investing. Mm-hmm. We're not saying we are incredible at it. We're not saying that we're the definitive.
We're just two random dudes.
It says it on the we don't really know fully what we're doing yet.
Yeah.
And this is our journey. So hopefully you guys can enjoy and come along with us. And hopefully we can answer this first question of, should you be investing with debt? What do you think?
So I think you're going to say yes. This is our fifth take.
I'm saying, I'm going to say no.
Yeah. What would I say?
What would you say?
Well, I think obviously the answer is usually doesn't sound like a good idea. But I mean, but there is some good debt. There's business debt and there's personal debt.
Yeah. We're talking. Yeah, and we're not talking about, for instance, we're not talking about
so let's get
a home loan. We're talking about debt. We're not talking about your mortgage. Mm-hmm. We're talking about if you have heavy credit card debt, debt that stresses you out too, right? Like the debt that's on your mind. That may not be necessarily the best time to put your money into investing. For me, personally, when I had debt back in the day, I paid it off. If I had debt now, I think the first thing I would try to do is figure out every possible way to pay that off, then get some more money in my savings, and then invest it. That's my take on it.
Yeah, that sounds like the wisest thing
you would hope
somebody would do. It seems like the way to go. But I feel like human nature is a bit different, and we always want to. Everybody wants to do a little shortcut, They want to I don't know. There's all these. All the stories you hear on the internet, people taking out money out of their house in order to put in the stock market and then ride it up. Some people probably just lost everything, but some people made millions,
Yeah.
Why not do that,
But it's you always hear about the success stories, and I feel like in investing, it's kind of like gamblers. I had a gambler in the family, and you never, you always hear that they're winning. Mm-hmm. You always hear about the good things, but you never hear about the part where they're losing, and it can be the same thing with stocks. I just never, I have a hard time trusting what everyone says. So for me personally, that's the way I go about it, and I think that trying to pay off the debt first is the best thing, and so let's go from there, right? Let's go from. I think we both agree. Let's go from how do we get rid of this debt, right? There's three ways.
Yeah,
there's a lot of ways.
Couple ways, but in a nutshell, is if you have a debt, you either increase your income or you decrease your expenses.
Or you can do both.
better yet,
right?
do both.
So you can do both. So we can start. Let's start with the easier thing first. Like for me, I would think that maybe other
Because
people
Brent
might say
is a
this-
very talented photographer, and he's like killing it. So
no. But like for me, like decreasing my expenses would be the first place I would start because I'm the kind of person. I'm a consumer. I love buying like nice shoes. I always like buying. I like back in the day. I used to like buying the latest camera all the time. Latest.
Yeah.
So yeah, the first thing would be to decrease expenses. You told me a story about how you decreased your expenses during Roni Rona with your
The old
Credit
decreasing
card.
the expenses during Roni Rona situation. Yeah, so I think in Roni Rona, at the beginning, it's kind of like a necessity. Like whether you want it to decrease or not, like
it was
you
you're
got to
right.
do it. Otherwise, it's not good. It's
Especially
not
with
good.
us, we're in the event. Danylo's an amazing wedding photographer, and as you know, pretty much all of our gigs either got postponed or canceled.
Yeah, so most events got postponed. So that's like 70% of your income down the drain. Well, it's postponed, but we still had good thing that I actually learned video. So I do photo and video. So
you did something
thank
else.
God
But-
that I invested into myself. And,
No, that's good. But
have video
what you did was
production.
you decreased your expenses, right? The first thing you did, right?
yeah, so as soon as
What was that?
pivot and shift. So while I refocused my business, I just went through all my, step one, look at your credit cards statements and just go one by one. And I went through each thing and just noticed I had so many things that I've been paying every single month, like stuff I signed up for like a year or two ago.
So
And
subscriptions. So you can go through. You can get rid of subscriptions.
like I don't even remember what they are.
Wow. Same thing. There's like sometimes you're in bed and you're like, I think I'm going to use that app, and you subscribe to it, and you're like, shoot,
Yeah.
why did I do that? So you got rid of those. I did the same thing. I called up I called up my telephone company. I called up a lot of renewals were happening at the time, so I had to renew my website hosting. I called them up. I said, look, like things are tough. What can you guys do? They gave me half price for 3 years. My telephone company gave me a discount.
Yeah.
So these are all things, like little things that you could do to decrease expenses. Even in normal times, there's so many things. I've heard of people, calling their credit card company and they change the interest rate. Like,
Well, you make a good point, and that's like you got to ask. It's good if you don't ask, you might not receive. So if you ask for a discount, often a lot of these companies are more than happy to. Especially now, people understand. People are going through tough times. Most companies are like, no problem. Like they gave me 3 free months to just on pause on my account until I figure it out. They're like, don't cancel. Take 3
Beautiful.
months on us. Come back in 3 months, and then you'll back. And it was fantastic. Like with shout out to Frame.io. I used them for my video editing to give feedback for like videos. And they said, because I had a really great deal. I had a really kick-ass great deal, like $9 a month for like something that's $20, usually $30. But if I canceled, I would have been out of this deal. But then they were really nice to me. I think we shouldn't underestimate like
the power of that. You
power
were
of
talking
that.
about earlier about like how who was you were talking about somebody who
yes. So
Yeah, bring
Timothy
that up.
Ferriss.
Timothy Ferriss,
So I'm a
right?
big fan of Timothy Ferriss, guy that wrote 4 Hour Work Week. So he says, I think it's like a stoic practice, is you just do stuff that makes you uncomfortable just for the fact of being, to basically strengthen yourself as a person to get a no. Just get used to being uncomfortable.
and
to
what was
get a
the way
no.
of doing that? What was the way
So
of doing
the way he did it is, an example is you go to Starbucks, next time, ask them for a 10% discount.
that was the way he said it, right?
Yeah, it's just like,
wow.
would you do that?
Wow. I would be
You're just like sweating.
Wow.
Everybody, the judgment of everybody.
oh
like
my gosh.
the nerve on this guy.
But who knows?
Asking for
Maybe
10%.
that day
Who do you think you are? But you get, like, nobody told you. There's
You-
no
you
law
can't-
that tells
yeah,
you
don't
can't
do
ask
that.
for a discount.
I mean, people do it all the time in our business to us. So
Yeah, exactly. When they do it to a big contract, it's like, oh, no problem. But when it's a coffee, it's a big problem, But
I'd still be scared, but that's exactly what we're talking about is like what we did during the Rona, but it's something that in normal times we could do. So we can decrease our expenses.
Yeah. And actually, some people asked that question at Starbucks and got the discount. Like,
They did, huh?
One, people will get it. And then...
So this goes for everything. So this is something... should we go to the next point, which is that if you want to, so there's decreasing your expenses. Oh, wait. In decreasing your expenses, there's also... do you really need to buy those new pair of shoes, right?
Yeah.
Or instead, should you hold on to that money, help pay down your debt, and then once you pay down your debt, start paying down. You pay off the debt, you increase your savings, and then instead of buying shoes again, you take that money and you put it into a stock. Instead of buying those Nike shoes, you put it into Nike.
Yeah. And we talked about this before. So it's never a yes or no question. There's always you could always flip it in a way where it might be a good idea. So the shoes, if it gives you wings and makes you feel good and you're feeling good, you start your business, it motivates you. Like, kudos to you. If you've been depressed for 5 years and these shoes magically
then it's worth it.
do the trick for you for whatever reason, like,
buy it.
Fantastic. Your ROI, return on investment on those shoes,
is incredible
because you made something, you got something out, you got more out of the product than you gave in.
What's the last thing that you spent money on that you think you could have instead saved that money?
Yeah, so let's play both, because like, just to play on what you just said about buying stuff. So like, I like to invest a little bit more in like a nice shirt, because I do in-person meetings with clients. So I like to feel good. First of all, not just to impress, you just feel better when you have...
It makes you feel...
You're like, hey, bada bing, bada boom,
Hey, I'm ready to show you your photos.
Yeah, it's a great success, Yeah, but seriously, it just makes you feel good, and that's why, just like the shoes. It's like the shoes. Something makes you feel good.
It's worth it.
It's worth it. But at the same time, I buy most of the stuff when I go see my relatives in Ukraine. So I bought it good price in Ukraine from Turkey. And Turkish people make really good like silk shirts. It's like $30, $20 for a silk shirt.
Okay, so you're still...
I bought like 5.
But see, you didn't go and spend like more than you needed to. So right there, you're already making good decisions. You're already working that mentality of like, okay, you're like training your brain to, yes, I need this to make myself feel better, but I can do it in a way that's gonna like not hurt the bank account.
Yeah, and that's a slippery slope. And then like I bought 3 shirts.
Oh my!
And then I bought 3 shoes.
But you bought it because it's a good price and it's a good investment. That, in my opinion, is like an investment in yourself and what you're wearing. Yeah. What I'm asking you, my friend, is what did you spend money on last that you should not have spent money on? Come on.
Oh, probably this laptop. Like, so I have this beautiful MacBook Pro that's lying around somewhere. So,
but you use that for your business. You're a photography.
So that's actually a really key thing about. As a Kijiji hustler, you really want to buy MacBooks, really resell very well. So Apple products, why I love Apple, I invest into Apple, is they have really good resale value. So if you buy something, I discovered that you can buy an iPad, and if you buy it used, you can resell it in a year or 2. And if you bought it at a good price, you could literally sell it at the same price and use it for a year or 2. And even actually for lenses and cameras, especially lenses, you can literally do the same thing.
Yeah,
so it's like gold. You buy it at a good price, you sell it at a good price, and that's actually like a huge hack that I...
so this is a way that you helps you not get into more debt. So you're not buying the latest new lens from the dealer, you're buying used. So it's the same thing as like some people, instead of buying like a really nice car right off the lot, they buy it used because it's already, the depreciation happens right off the lot. But when you buy it used, there's a better chance that if you do end up reselling, you're not losing as much value. But this is a whole other episode.
That's a whole other episode.
We're getting into like, okay, this is an episode on like, okay, we're gonna Kijiji hustle.
But the point is, there's a lot of things you could do with buying, selling used stuff to decrease your expenses. When I got into investing, 6 months ago. And then I really wanted to put as much as money. I didn't have any money to put into stocks. So then like I started looking around. I'm like, hey, I got all this gear, all this photo equipment that I haven't been using for a couple of years. So I'm like, hey, well, I'm just gonna sell it. So I just made a list, and next thing you know, bada bing, bada boom, it was like $2,000 of stuff that I sold, and I just put into stocks. And it's crazy how much stuff is lying around.
That you don't use, that sits around. You had a motorcycle that's sitting in a garage for 6 months, right? And you were thinking of selling that? Because you like your gear. You like your gear. Like for me, like a few years ago, I started already being more of a minimalist per se with my business. So I was already like using less gear. I was using the least amount of gear. I was already just selling everything off. Also, I bought a place that was way too small for me. But I was like, oh my God, this place is so small that I really need to like not overbuy things, right? And I love gear. Like back in the day, man, I would just, new lens comes out, I buy it. Computer, I buy it and I keep it. Whatever. It was just, but same thing. Back then, I started just selling everything that I didn't need anymore. And since then, I started buying less. So now it's like decreased. But even this year, I had so much gear that I wasn't using. So I did the same thing. I sold it and I put some money into Bitcoin at the time. So this was a few months ago.
Bitcoin action.
Yeah. So the way I looked at it like, yo, this stuff is just sitting in my closet collecting dust. So why not, once I convert it to cash, instead of spending it on like new shoes, put it right, boom, into Bitcoin. And I said to myself, like, I was willing to lose that money completely. I was willing for that to go to zero because it was already at zero in my closet.
So should playing crazy devil's advocate here.
Do your thing.
So crazy idea, you got $10,000 of debt, and then you're like, hey, I'm gonna risk this on Bitcoin. This thing's gonna go up. I'm gonna take an extra 10,000. This thing's gonna triple, and pay off my debt and double my investment.
See, that to me is a bit different.
Sounds like a good idea.
See, for me, the way I look at it is like when I'm putting money into anything that I'm investing in. If that money is money that would alter my life, like if I lost it, if it went to zero and my life would change completely because of that, then I really wouldn't feel good about investing that money, right? So for me, for instance, the money that I put into cryptocurrencies or into stocks, if all that went to zero, and if that went to zero, like all the things that I have money in went to zero, man, the world's over anyways. So let's get into a bunker. But anyways, if it went to zero, it wouldn't change my life. It would suck. I would have to work my ass off to get that money back later, but it still wouldn't change the way I live my life. I could still go on a vacation when I want to. I could still go to the restaurant I want to. And that's like my belief. Everyone has a different way of doing it. I'm sure some people had debt. They take out the $10,000. So they have 10,000 debt. They take out 10,000 and they get lucky and they fucking become super rich. Maybe that happens. Maybe it happened with people.
I think that did happen. But I think when we hear it in the news, it's like, you hear about that one kid that made like $1 million from like 1,000 or 10,000. Whatever the story is, you usually hear about the extremes.
Yeah, you hear about the top, and the thing is, you also hear about people when they make the money, but you don't know what happens after that, right? So to me, just the fact that, let's say I have 10,000 debt and then I basically am making a bet, right? To me, that's more like gambling. So even if I were to be lucky, am I then going to be like, let's say I get lucky and I turn that 10,000 to 100,000. Do I then have the right mindset to keep that money? And that's what you were talking about, right? Like it's all about mindset. So like the first thing is get out of that debt. You're going to be proud when you get out of that debt. When you grow your savings, you're going to you gain even more pride. And then you can start to invest and your mentality is going to start changing. What were you saying about mentality? You were reading recently about.
Yeah, well, you hit a good point about, as you were saying, about getting out of debt, which is momentum. So, which is a key thing. As soon as you start to, like for me, when you start to pay your first 1,000, extra. When I had $17,000 of debt, I paid my first 1,000 and an extra 1,000. And every single 1,000, you're like, this is good.
Yeah.
So it's like you start dancing and you're like, okay, well, you have hope. Basically, you get hope that this is actually doable.
Yeah.
The worst is when you think, this is
impossible.
Just throw in the towel it's done. Like,
and then you gamble on a $10,000 bet.
That's the risky bit. Exactly.
But you were changing your habits. You were slowly like improving yourself.
Yeah.
And that's what I think has helped you in the last 6 months, because you do take some risk in the markets, but I feel like you're doing it in a way that's like it's coming from a grounded place, right?
Yeah, from managing the risk. So what you were saying, the mind game and the mental game is, first of all, it's good to have that momentum and to feed on that momentum, and it helps to have other people, and that's why we're doing this channel, around you to talk about it positively.
Yeah, to give you their maybe negative stories, like what happened to them in the past, and
and maybe like for people with debt, David Ramsey's a good place to go.
We're not gonna.
That's a great place to go if you have a lot of debt.
We're gonna try to make more in-depth videos on the best ways to get rid of debt. I want to talk about how you could possibly consolidate debt. Not today, but I think that's really important. There's a lot of ways to get rid of it. But the best thing is to like do that. Work on your mindset.
So what does that mean? It sounds like a fancy word.
We got 5 minutes. We're going to wrap this up. We're going to talk about mindset. So we said we think that if you have debt, we basically have agreed that we wouldn't get into the stock. We wouldn't get into stock market or investing if we had debt. So let's say we're getting rid of that debt. Now we're growing our savings. What is the mindset that's going to help us move forward?
So right now you just went from having a crap load of debt and now you're at zero debt.
Yeah, you've taken all our advice. You've started, decreasing your expenses. You've increased your income. Maybe at work you've found ways to, you found a side hustle. You got another job. You paid everything off. You've got some savings.
You found an accountability partner.
Yeah.
So
and now you have $1,000. You're like, what am I going to do with this $1,000? Are we ready to invest yet?
So I got my opinion, and then
what's your opinion?
I invested right away. Everybody, the smart thing to do is just go paper trading. It's like fantasy baseball.
So paper trading is like when you're not trading with real money. You're basically, a lot of not accounts, but a lot of trading platforms allow you to like trade with fake money, which is like a really good way to practice. But it's not the same as when you have actual money in the market.
Exactly.
Because you're not actually playing, you're just playing with numbers that don't mean anything. When the numbers are what you are worth.
It's real money. It's real money disappearing from your pocket and just going down as the numbers go.
Yeah. So the most important thing is really like what we're trying to get across, and we're going to try to like, hopefully like that's what we're trying to improve every day on ourselves, in ourselves, is the mind game, because the psychology in the markets and the way you invest is what it means everything in the world.
Yeah. Right? And a lot of it has to do with managing your risk.
Yeah.
It sounds like a dry financial term, but really...
But that's exactly, so the example of...
so what does that mean though?
So managing your risk is seeing like what you're investing, what's the loss compared to what's the potential gain. Right? So for me, with the money that I put into crypto, the way I looked at it was like the amount of money that I put into crypto, what does the loss mean? For me, this is how I manage my risk, is like, what does the loss mean to me compared to the possible gains of what, fundamentally what's being, from all the research that I've done, what could possibly could change my life drastically. Whereas if I were to lose all that money, it wouldn't change my life at all. What is it for you?
Yeah, so basically, wind down. For you, you compare the downside to the top to the upside, and the upside is much, much better than the downside. So it's a good idea.
Yeah.
So it's a calculated risk.
For you in trading, what is it?
So for me in trading, well, I think at the beginning, I probably wouldn't recommend doing what I did, because...
Good for you.
When your portfolio, there's a point like a month ago, my portfolio was down like a little 15-20%, and it was actually on the right before elections. I was stressed. Like, that's the thing, people don't understand. Like,
that was your first moment in the markets where you
you're
had a
stressed.
downturn,
like,
right?
And that's when when you're stressed out from your investments, that's because you have too much risk.
Yeah.
If you're ever like got jitters or you're like, oh, I don't know how this is gonna go, you're putting too much risk.
Yeah.
You're putting too much.
And so coming back all the way to the beginning, now let's imagine that risk that you had. If you also had a bunch of debt, that would have made it much worse, right?
Yeah, I would have a panic attack. Like it
would not have been good.
It's just not good. Like
and
just
so
be
you would
foaming
have,
on the floor.
right?
It would not be good.
I'm sure like some of the investments that then turned around, as you know, since elections, things have gone very well in the stock market. Which doesn't make sense. Everything was falling apart, and the stocks have just been flying. So if you had debt, it may have forced your hand to sell some things that you really believe in that then had a big turnaround. So this is why we're saying, this is why we asked the question today. And I don't know if you can all tell, our answer is, clearly, try to get out of debt, get some savings, and then get into the market. That's my final word. What's your final word on this?
Before we put a lot of money into investing, number one is just getting educated about the lingo, what all this terminology, what's the TFSA, what's the RSP
for Canadians?
Just all sorts of terminology that I didn't even know what are they talking about in the news. It's just gibberish. So just understanding all those things will make you make better decisions.
While you're paying off your debt, whatever, paper trade, learn as much as you can. And then once you've saved up a bit of like a rainy day fund, now you have some more money to invest, then get in there, do it.
We're in this together. Stronger together. Booyah! All right, we'll see you guys next time. Peace. Thanks for joining us on Two Random Dudes Invest,
The podcast.
If you got any value out of this, we would really appreciate a review on
Apple Podcasts.
or whichever app you're using right now. We have a
Tsunami of content coming your way.
and it will be covering the latest in stocks and crypto. See ya.